Morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is rshore@fxcm.com, and today is Wednesday. It's the 12th of Jan 2022. Just going to bring up the high-risk investment warning. I'll keep this on screen for a few moments. We'll go until the top of the hour, and then I'll switch over to the crypto minute, which I haven't held for a few weeks now, but I think it's time to get it back on track. So just to give you a heads up, it's Wednesday, so we'll do the DAX to the top of the hour, and then move over to the crypto minute. It should be the same link as previous, but if you don't have it, I'll just pop the link into the chat, and let me just try that again. Okay, should be okay now. Yeah, all right, it's in the chat. Okay, let's bring up the commentaries disclaimer. I'll keep this on screen for a few moments. Hey, Howard. Yeah, no worries. Howard's just asking to put the webinars, specifically he's asking for the crypto minute to put it onto Telegram. So yeah, I'll definitely do that. I'm going to put it onto Insights as well. So all right. Here's our references: MarketScope 2.0, CNBC.com. Let's bring up the CNBC note, and let's go through it. European markets head for positive open ahead of US inflation data. So today's Wednesday. We'll get the CPI out later, and we'll get the PPI out tomorrow. Retail sales come Friday. European stocks are expected to open high on Wednesday as investors await the latest reading of US inflation. And global markets are awaiting the next reading of US inflation on Wednesday to assess the economic picture in the world's biggest economy and the Fed's next move. The consumer price index is expected to show inflation spiked in December, with economists predicting that prices rose 0.4% in December from the previous month and 7% year on year. So running at 7% is it's quite something given sort of the last decade. 7% is extremely high, and in terms of the rate of change, in terms of pace, it's close to the pace from the 80s. So very concerning inflation picture. Fed Chairman Jerome Powell said on Tuesday that the economy is both healthy enough and in need of tighter monetary policy, which likely would entail rate hikes, tapering of asset purchases, and a smaller balance sheet. He, however, did not announce an accelerated change in policy from what central banks had already signaled. US stock futures held steady overnight after a rally on Wall Street as investors bought the dip following a 5-day sell-off in the S&P. Meanwhile, Chinese markets rose on Wednesday, tracking gains in other Asia-Pacific markets. Data released in Asia on Wednesday included China's Consumer and Producer Price Index for December. The index was up 1.5% in December compared to a year ago, according to Reuters, a drop from the 2.3% increase in November and lower than the 1.8% expected in a Reuters poll. On the data front in Europe, the latest Eurozone industrial production figures are released. I'm just taking a look at these adverts. I'm begging your pardon. I don't know why I'm getting a senior apartments advert. Nevertheless, I'm begging your pardon. Let's go ahead and take a look at the DAX the DAX chart. All right, I'm just thinking if we start with this chart. No, let's start with the weekly. All right. So the weekly chart over here has improved considerably. Yeah, and Peter's just saying that Powell's statements yesterday certainly supported markets, and you can see that in terms of the buy the dip mentality with regards to the US markets yesterday, which, by the way, when we were doing the scalping US Open, we were looking at potential shorts, right? But the market rose off of these comments, and that's exactly the point. Is that when there is when there's such a important calendar event, you probably just need to look at it from the sidelines, see how the market reacts, and then formulate strategy. Just coming back to the DAX, you can see that this picture, as I said, has cleared up remarkably. We combined this candle and this candle. We combined that yesterday. When we did it yesterday, we were looking at, I think it was something like that. It was a doji with a slight sort of bearish tilt to it. Now we are looking like this. So the picture cleared up some. This is still an indecisive this combined candle. So we're combining last week and this week. We still have a fair amount of indecision here on the combined chart because this is a spinning top, isn't it? If I go like this, it'll become clearer. So we've got this the spinning top there, which again, certain amount of indecision. The way that we can perhaps see it is, well, take a look at the highs and lows of this week's candle. It's actually a lower high and a lower low. Okay, so in terms of trend, you know, it's kind of it's broken the swing up here. Given that, what I would like to see for the bullish case to continue is actually something like this. Let's make this a sort of sort of at the end of next week, hopefully we've got a bullish reversal candle, right? In other words, here's the lowest low, and then we have conditions 2, 3, but we'll only know that at the end of next week. So perhaps a little bit of sort of speculation, but this would, I think, clear up a lot in terms of the weekly chart. Certainly, the bullish sentiment that was absent yesterday looks like it's present this morning, but this combination of the two candles still hasn't given us absolute certainty. Let's go through to the daily chart, and let's get rid of that. I'm going to introduce a slow stochastic here as well. All right. Okay, so this again, much better chart, the daily, much better chart today than it was yesterday. Yesterday, when we did the DAX Open, we were in zone 2. You can see that it actually pushed up into zone 1 by the end of the candle. I think that's largely to do with the way the markets reacted to the testimony on Capitol Hill. The fact that it's pushed into zone 1, I think that is certainly apparent in terms of the weekly chart. What we want to look for here, I think, is, let's just zoom in. Is again the 3 conditions, just to cement things, just to make the bullish sentiment a little bit more concrete. So here, this would be condition 1. So it's the lowest low in at least 3 candles. Candle to the left is the higher low. Candle to the right is the higher low. Yesterday's candle, although it did push back into zone 1, it's still an inside period. It's contained within the reference candle's range. It's only this candle, so today's candle, that has got the higher low and the higher high now. So we've got 2 out of 3 conditions. To get this to close in zone 1, I think would be a bullish development. And of course, we want to get this back into 80. So just to extrapolate on that, if we get into the 80 area, okay, if we get into the 80 area, and if we hold the 80 area, in other words, we build some sort of base, I guess we'll call it a base, inside 80, then this could potentially be just the start, could be just the start of a swing or a trend. And if this is, in other words, we may have real opportunity here. I just want to have the today's candlestick close above this aqua horizontal. So it could be right at the beginning of a swing, and then we go back to the weekly. Then there's a real chance that this sort of speculative scenario actually does materialize, which is a bullish scenario because it puts in a higher trough here. Let's go down to the hourly chart. All right, so okay, so here is, this is the area here where the testimony comes in. So this is my time, 5 o'clock. It would be UK time 3 p.m. here. This is when the testimony started. You can see this is where the market starts to swing. Okay, so here's where the you get that angle and separation in the EMAs. It's also where the stochastic pushes into the 80 area. So the question here is, do we take advantage of this now? This seems to be a bullish sentiment. We're in a good, strong momentum area on the stochastic. Yes, we've got this R1, R2 just ahead of us. Is it worth getting in? Again, you know, I can't give the buy or sell advice. So I would suggest, how comfortable are you in terms of taking risk? And the reason I ask that is because I think that there is a risk at the moment. We're looking as if we're getting towards this overbought area. Now, in terms of indicators, for me, you know, I favor the stochastic because it's, in my opinion, a really good measure of momentum. But where it falls short is in its measure in terms of overbought, oversold. It's really poor. Now, if you read textbooks, they will say over 80 is overbought, under 20 is oversold. That's just a plain misunderstanding of the underlying formula. If you're going to short while the stochastic is in 80, well, you're shorting into momentum. You know, like, good luck with that. It's not a good idea. Where the RSI is superior to the stochastic is in terms of measuring the overbought, oversold, and you can see, and that's why we've included it to try and make the system more complete. So we've moved into 80 here. Let me just put on the legend. So we kind of are at 79.90. So we just on the cusp of being overbought. Now I don't know when this is going to normalize. Clearly, there's an underlying sentiment, and the markets can push higher, certainly. But you've got to ask yourself, is it worth this? This is the key. This is the key question. Okay, the key question is the reward I'm expecting worth the risk I'm about to take? Okay, and if there's a skew there, well, that should help in the sort of decision. This will normalize at some stage. It may take a few hours. In other words, we may see an overbought here condition for sort of maybe sort of something like that. But you can see they don't last very long. Generally, I mean, there's no absolutes here. So generally, the overbought conditions probably need a clear. But that's exactly why we've included the RSI. In other words, we've got R1, R2. So this is a strong resistance area. If we get some sort of pullback here, then we get a normalization in the RSI. Stochastic's probably still within the region of the upper quintile, and then we can see if the dip is worth something worth getting involved with. In other words, is this about a dip type of scenario? So that is just I think a snapshot of how the market's starting. It seems that there is a skew in the reward risk relationship. So just keep that in mind. It's come to the top of the hour, so I am going to conclude here. Just shortened DAX on a Wednesday because I want to get the crypto minute up and running again. So I'm going to close this webinar down, and then please join me for the crypto minute. So thank you very much for joining this morning, and looking forward to chatting with you in the crypto minute. We will do a US Open webinar this afternoon as well. Thanks very much, guys.